I'm very happy to welcome to the stage the CEO of AccountScore, Emma Steeley, and Equifax's Head of Innovation, Daniel Weaver.
Thank you very much. When Emma and I were preparing for this presentation, and we did do 5 minutes of preparation, we thought we could dance on stage to Don't Believe the Hype by Public Enemy. So I'm really sorry that we've not been able to do that.
Because everyone wanted to see Dan do that, for sure.
Patricio lent us his CD. He's got an extensive hip-hop collection. But we couldn't afford the license fee, I'm sorry, so you have to make do with us. Emma and I were asked to talk about open banking, so it's something that's it. We've been working together on for the last 12, 18 months. So how do I introduce this presentation? So I was thinking, I don't know whether anybody's mentioned it yet, but Brexit. So I think apart from Brexit, open banking maybe has caused the most column inches in quite a lot of the press over the last 12, 18 months, at least in Credit Today anyway. And I suppose, like Brexit, open banking, you know, a lot of people don't really know what's going on. I think lots of people have an opinion, but there are a lot of mistruths out there, I think, in particular, about Brexit and open banking. And so we thought, shall we solve open banking or shall we solve Brexit? So we chose open banking, so we're leaving Brexit to somebody else. So I'm here basically with Emma. So we've got a presentation today to go through and solve some of those mistruths about open banking. We're then going to show you a client demo, so what the open banking journey looks like for the customer. And then finally, we're going to talk about open banking use cases. So what do you actually do as an organization with the data when you get access to it? So on that basis, pass over to Emma to talk about AccountScore and introduce the company.
That's great. Thanks, Dan. Hi everybody. Thank you so much, Equifax, for having me here today. So we have been working in partnership with Equifax now, as Dan said, for the past 18 months, but AccountScore is in fact about 3 years old. We spun out of a consumer lending business that actually used digital bank transaction data sourced via screen scraping to be able to underwrite credit. So we took our expertise as a lender and then applied it to the bank transaction data. We were one of the first approved AISPs under our brand Consents Online back in January last year, and we feel open banking has been going from strength to strength. So what I want to go through with you today is really sort of doing some myth busting about what people are saying and what the facts actually are. So, no one is using open banking APIs. This is a myth. People talk a lot and say, well, you know, people are still screen scraping and nobody's actually hitting those APIs. They absolutely are. And what I want to show here is just an example of some of the clients that we're actually working with, and it's all via open banking. So whether that is within the debt advice, debt management sector, consumer finance, through to working with the tier one banks such as HSBC. And you see here, we're working with the M&S Bank as well on mortgages. The biggest one, no one will ever submit their credentials via open banking. This is a myth as well. Every organization that my team go into, there will be somebody that sits there and says, well, I wouldn't put in my credentials, so I don't believe that this is actually going to work. We have seen time and time again people sharing their credentials, and the proof is here that open banking has been growing month on month and shows no signs of slowing down at all. You know, one of the ways in which we work with our clients actually is to provide a turnkey solution, because what we do understand is when clients are looking to do an API integration, that requires investment on their side, where it's something that hasn't actually been proven out as yet. So we provide a turnkey solution that enables clients to go live within sort of 48 hours, so we can prove out, number one, that the customer is willing to share their open banking data, and then number two, the way in which we present the data is valuable to them. For me, the important stats on this screen are on the screen scraping versus open banking. So what we're actually seeing here is we make all of the customers go through the exact same journey. So they must submit their consent Then obviously they go through and they enter their credentials, and then we have a completion rate. And what you're seeing here is actually screen scraping versus open banking, pretty similar on the consent submit. When it comes to entering the credentials, the consumer is much happier to do so via open banking because it actually redirects to their bank login. And then the completion rates that you can see here, that is just because the open APIs are robust. The fact that people continue to say, oh, it takes so long to get the data, not true at all. On average, we can receive the data, run it through our normalization, categorization, recurrence engine, deliver it back to our clients in under 11 seconds. So I think that's pretty quick. We currently have 46 clients with AccountScore. We're adding about 3 to 4 clients on board every single month across a complete variety of sectors as well. And the last one, maybe this annoys me more than the credentials one actually, it's about, everybody says, oh, it's just about aggregating the data. All we need is the data. No, absolutely not. Because when you first see transaction data in a raw form, it's actually very difficult to be able to use. So what I'm showing you here is an example of our dashboard, and it's very much a lending style dashboard. And this is what we do with the data. So the raw data comes to us, we then normalize it, categorize it, and run it through our recurrence engines. And what you're able to see here is where we've worked incredibly hard is understanding the difference between a discretionary spend category versus an essential spend category. The other thing that's very difficult to spot on digital bank transaction data is income. What is earned income? So we have salary scorecard and algorithms that overlay to be able to truly spot what we believe is the earned income in that account. So I think they are fundamental things that are required when you're looking to underwrite credit data. Lots of people talk about categorization and say, categorization is easy. Well, when you are looking to underwrite, you're not really wanting to understand, okay, fine, Starbucks is coffee, McDonald's is burgers. That doesn't matter. You need to see that differentiation between discretionary and essential spends so that you can create that net disposable income and understand if that customer can afford that loan. The other element here is really the event feed, which is kind of, sort of top, middle left. And the events is powered by our recurrence engine. So when you're looking at the recurrence engine is really looking for patterns within that data. And it's incredibly powerful. It's not just patterns for what is present, it's what has been present and may now be missing. So there are those kind of flags that give the indicators to our clients as to whether that customer is in a strong position, if maybe they are potentially moving into a financially vulnerable position, and so on. So for me, the key is all about what we do with the data once we have it, because just having the raw data doesn't really work for anybody. So what I want to go on to now is actually show you how this works in practice. So I'm hoping that our video will play, and I'll be able to take you through the open banking as a service journey and how it works for the consumers. So initially, a consumer, when they come to consents online, they would be going to a client. So this client here is Digital Bank, and a customer is then applying for a loan. In order to apply for the loan, they obviously have to fill out some of their personal information, and so they go through and they complete that. The customer is then asked to select their bank to enable them to be able to go through the open banking journey. And then comes the first regulatory piece. Explicit consent is required with open banking. The customer must be informed about what data it is we want to access, for how long, and the reason for that access. So once they've displayed that, it's completely configurable on a client-by-client basis. You can go back to the beginning of them having their online banking account. But majority of clients go back either 90 days, 180 days, or 12 months. And then it OAuth. What we're showing you here today is actually the new V3 app-to-app authentication. So this was released in March. We expect it to be bedded in by September, but we're actually starting to roll that out. And it's a much, much slicker user experience for the customers compared to entering their credentials, which is what they have to do at the moment. Once we've had that, we've then had the data, run it through our engines, delivered that back via API to the client, and they're able to make a real-time lending decision. Then we must complete our regulatory responsibility. We have to discharge that, and we have to show that customer what data they shared, with whom, and on what terms. Consent management is a fundamental requirement of open banking. So as consents online, we message the consumer and we give them the choice to be able to go and create a profile with consents online. So they would enter their basic information, and then they go through and they see that there is a pending consent that they have actually granted. So in order to be able to access that consent, we must also complete multi-factor authentication. And so therefore, we send a one-time only security code to that customer's phone so that then we can be sure that, yes, we're about to reveal the right information to the right person. And as that moves through, there you go, entering the code. Then the customer can see the full consent. So this is the big reveal to the customer of, you have shared your information with Digital Bank on this day, for this reason, and for this long. So really, what it's providing is open banking as a service with full regulatory compliance, connections via open banking to the CMA 9 banks, and now more. We actually have Metro Bank also live now, and we're able to deliver it to clients within a 48-hour period. What I'm going to hand over to Dan, so he can really talk you through now the use cases that this is already being applied to via our clients.
Thank you. Thank you, Emma. So I suppose if we roll back 12 months, I think that what were the first set of use cases that open banking was delivering? And I think the majority of those would be the replacement of paper-based documentation. So how can we faster, securely transfer data from A to B using the open banking ecosystem that provides a better customer experience, shortening the time it takes to get this data to the lender from a week, 2 weeks, up to a month, to a fraction of seconds or minutes. And so that was, like, I'd say, the original use cases that we were adding value by massively reducing that time. What we're now seeing is that after having done that, there's a whole array of insights that you can apply on top of this data to maximize the value to your organization and to deliver better consumer outcomes as well. So I'm going to step through 3 of these today. And the first one here is a ID anti-impersonation use case of open banking. So don't worry, GDPR people, this isn't my real data. So it does mention Wrexham. So anyway, Daniel Weaver makes the credit application. I type this information into a website, or I'm on my phone. I then go through the open banking journey. So you've just seen that now that Emma's displayed. I've given my consent. The data has been picked up and then transferred to the organisation that I'm applying for credit with. This is as an example of the credit data, the payments data that you see from open banking. And those of you who know me would say that probably looks like Dan Weaver's transaction data. There's pizza, there's Wrexham Football Club. I am partial to a Subway, but there's nothing in there that conclusively says that this is Dan Weaver's transaction data. You've got a sort code and account number, but I'm declaring I'm Daniel Weaver on the input message. So what we do now is combine those 2 bits of information by triangulating that really with a piece of Equifax data. So we go to our Insight and Cato database that we have basically the whole sample of UK current accounts that say Daniel Weaver at this address, this date of birth, owns this sort code and account number. So then once we match those 2 pieces of information up, we end up with a match. This is Dan Weaver's account. And crucially, I've gone through this journey and I've been authenticated by the bank to provide this data. That authentication, I've either entered my online banking credentials that only I should know, or alternatively, I've now been through one of the new open banking journeys that involves my bank's mobile app and my biometrics. So we've tied these three pieces together through open banking, but the crucial bit around that, I think, is that actually it's involved in authentication by the bank to using a piece of information that only I know, or my phone and a piece of information only I have, my thumbprint. So that was an example of an anti-impersonation tool that you can use for open banking. After having done that, you can also use the data for other purposes. So income verification is one that we're working on with a number of clients at the moment. And many of you will already have income verification solutions available today. And so how does this differ from what you're doing today with current account turnover data? And I've got a graph here that it's an example customer, and 100% is the total amount of credit turnover passing in this account, sum total of all the credits. And that's what we see, that's what's provided to us by the banks for our Cato database. What open banking and transaction data provides is the ability to split that credit turnover into each of the income components. And so shaded red, you've got things like financial services. So if I've taken out a loan, that shows up a credit. You don't want to be included loan as income salary. So I wouldn't expect you to include that, and so we can remove that using the transaction data. There could be other non-income related sources, such as gambling winnings. I'm not a very good gambler, but if I was, I wouldn't want to rely on that to prove my income. You've then got things that you may want to consider as partial income, things like benefits, pension, cash deposits, and transfers. But again, you've got the option now whether to include them or not. And lastly, you can get to see my actual salary at Equifax. You can work out which day of the week I'm paid. You can see if I'm paid a bonus, as if, and you can kind of work out kind of like the trajectory of Dan Weaver's career over the last 5 years, if you so wish. So I think the benefit to organisations such as yourselves is that this is it's the most accurate way of verifying income. And I think that's been proven over decades of using bank transaction data to verify income. It's just there hasn't been the means to deliver that data just hasn't been customer friendly. So this is what open banking is help facilitate, is the real-time transfer of this information to consumers to prove that they do earn this amount to be able to draw down that credit. And just as an example comparison then with Cato data, I declare my gross annual income is 33,000. We convert that to a net monthly income after tax of 2,100. We then, using the transaction data, we can see individual lines of income. So in this example here, I've got 3 lines of income. The first one is a salary from ASDA. The second one is a salary from WFCBC. And then the last one is a benefits payment from Department of Work and Pensions. And access to this granular level transaction data just means that we can be so much more accurate in the income verification result. And what you can see in this example is that we're looking for the 2,100 figure. That's what the customers declared they earn. But if you look through months 6 to 3, there's not really that evidence to suggest the customer earns that amount of money. But what has happened here is the customer has changed employer in the last 2 months. And so we're now picking up in the most recent 2 months the salary that the customer is declaring, i.e. their current salary. And then if you're using kind of like our traditional Cato tools, that would not classify under our product as an income verification because there's not the evidence in which to verify that income. But having access to the transaction data, you can convert it from turnover to salary, and then you can see these individual lines. So I would say that most lenders would say that is verified because I know that this person now earns that amount of money, but they've only been working there for 2 months. And last use case I'd like to talk through is credit risk assessment. So traditional way that many organizations look at building scorecards is all about the amount of, and type of data held on a credit file. And so typically we would build multiple scorecards based on a positive credit data, negative credit data, but then you also have segments of customers that don't have very much data at all, and so we typically call them thin file. And what we see with transaction data is that you can kind of replicate that same segmentation, but it's a completely different data source. And just because you're thin file on credit data doesn't mean at all you're going to be thin file on transaction data. So having access to, we can pull back as far back as the online banking system goes. We can pull back 5 or 6 years of transaction data if that's appropriate. But we can pull back lots of data in which to help process thin credit files. So what information is there in a transaction data file? And I think the good thing about transaction data is it's quite easy to understand, because I think everybody here would have seen transaction data because you've seen your own in your bank statements, in your apps. So you know what's in there. I don't think, if we looked at the UK population, that many people would have seen their credit reports. So from one aspect, this is actually quite easy data to understand and to think about what trends could be reflective of credit risk. But in terms of that's an income and salary, we can see the amount, we can split that into segments, the granularity, the history, and how stable that is. And we've done quite a lot of analysis. You can see that, as predictive, an Uber driver has a lot more variable income than somebody who's paid once a month a set fee. And so you can start to take account of that in your credit policy. We've got the employer. You can see changes of employer. I also suggest it's easier to income verify people who are self-employed using this data as well. You can also see information that's not found on the credit file. So rental data's popped up a few times today. It's one of the things that isn't the easiest to categorize. So that's where you really need a very accurate and granular categorization engine that categorizes the different types of rental data. It could be social housing, could be a private landlord, it could be sort of like a transfer from between friends. So there's lots of different types of rental payments, but you can use this, that's it, because you can evidence it within the bank statement. Council tax payments, there could be £100, £150 a month. That's a significant payment, and again, is evident of, demonstrates good credit risk. You've got other types of payments, insurance, utilities as well. The evidence of these payments is seen to be a good credit risk because you're making these payments. There are other things that aren't so good, that aren't positive examples of credit risk, things like gambling. And I think that's just one thing that we need to bear in mind when creating credit risk scorecards based off transaction data, is that just the ethics of using all of this data. Gambling itself, I wouldn't say is bad. I'm partial to a little bit of gambling, but I'm not very good. But excessive gambling, and when that starts to, it could be an evidence of vulnerability. So we just need to be careful, I think, when using parts of transaction data for credit risk in making sure that it's appropriate for that particular purpose. You've also got other type of data, you've got real-time data there, so information on high-cost short-term payday loans that hasn't yet reached their credit file. When we pull the data from the banks, it's that data as at that moment in time. So if I took a high-cost short-term loan out this morning, that would be reflected in my data as of now. And there's just so many other behaviours you can see in there, from attitudes to spending and saving. Do I maintain a credit balance in my current account? That's evidence, again, of positive credit risk. Am I constantly in my overdraft? Do I occasionally dip into my unauthorised overdraft and get fines? So lots of information here on which to help assess credit. And then also, that's it, signs of financial difficulty, potential vulnerability. So lots of information here that we need to take account of. And just introducing, so we're just nearly ready to launch a new product with AccountScore, and Equifax have built a transaction data credit risk index that differentiates between good and bad payers using the transaction data. And in particular on segments of the thin file, we're seeing huge benefits. So on the kind of like the credit invisibles, the people who have only say 1 or 2 accounts at the credit bureau, there isn't any means in which to differentiate that population. Whereas looking at the transaction data, it is so powerful on that particular segment. So in summary, should we do this together?
If you like, then.
So I would say from our opinion, so open banking is not yet perfect. I think when the app-to-app journeys come into play and they're all live, I think that's going to be such a huge boost for the customer journey. You'd be able to transfer your open banking data without potentially typing anything in. Just the thumbprint on my app would be able, with a few clicks, to provide consent and transfer the data. Whereas at the moment, I'm having to type in lots of passwords. So I think, but it does work. We see, as Emma mentioned, 38 million kind of API calls, 97% uptime, I think it was. So open banking does work. However, enhancements are still coming forward.
Yeah, and it's still I still think it's absolutely early days. I mean, we sit here and go, well, you know, we've been using this data for so long, but actually, you know, for everybody, it's something new. And I think there's been incredible improvements over the last 12 months in the way that the journeys are actually working. And I think the banks are really working incredibly hard to deliver what they're required to do.
Yeah.
So yeah, and I guess, you know, this leads on to the next point really as well. So customers are definitely willing to share their data. It is very much around that value exchange, and in a credit journey, it's something that the customer feels incredibly compelled to do. Certainly, if they're sitting in that sort of credit invisible segment, and it means that they are going to have an opportunity to be looked at differently, where before they may have just heard the word no several times. Yeah. So I think that's a real key benefit of open banking.
We're working on a number of proof of concepts at the moment that are looking at the marginal declines. And at the moment, these people would not get approved for that particular product, variety of reasons, but then the use of open banking data may tilt that decision in terms of the customer's favour by evidencing that they are a good affordability. They do have good credit risk because of this information that isn't on their traditional credit file. So just a couple of examples there that I just think, as a customer, there's this extra opportunity incentive to provide this data to potentially get better products and services in return.
Yeah, it's absolutely starting to make it personal for the customer, for sure. Yep, I mean, the momentum, right? The momentum is there. We're definitely feeling that now, right? So certainly we've had, we've definitely got the momentum across a range of sectors now, with clients wanting to sign up and work with us in order to understand the value that open banking data can actually bring to them. It's never going to be something that is just implemented overnight across everything. Of course, I wish it would be. But definitely clients are starting to engage and use the data.
Absolutely. And the last one, start small and start soon. I'd say that the hardest step to make on open banking is the first one. It's quite an obvious statement to make, but it really is the case. The good news is we now have lots of experience of getting clients live with open banking. We know the potential problems. We know how to work with your legal, compliance, operations, data privacy people in order to ensure that these people are represented and buy into this process. We advise taking it steady and slow and steady. It's not a product that you can send down a pipe, ramp up the volume and look away and hope everything goes well. It's something that you'd like to start off small, start off safe. You need the learnings yourself, typically, to build your own business cases. So we're advising, pilot projects that answer 1 or 2 kind of like key objectives. Then that brings you to the next step, and you can then build the business case to go through to full automation, to expand the volume, but doing it in a safe and secure way that means that minimises the risks to your organisations.
Absolutely.
Okie dokie.
Great.
Thank you.